Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Okay, today, first of the month, July 1st, Wednesday, this candle right here, we were doing well and then the market started selling off. Basically, it was a chip sell-off. The SMH sold off and we are continuing this rotation trade that we've been talking about for a while. We're seeing the chips down about 6% today, and the market's basically flat. I like this. I like the fact that the breadth is expanding. We're going to talk about that. We're going to talk about its effects on the market, and we're going to go over some of the trades that we did. I also added to a position today, so we'll talk about that. Okay, so let's talk first about the technical picture. Guys, still bullish. We're above the 50, still holding above the 50 despite the sell-off towards the end of the day. And we said that maybe we're consolidating at highs. We might get into this, like, we said it before, this like wedge pattern. I'll draw it here one more time. This candle right here is a lie. This tail is a lie. It never actually went down to 720. So it's basically still a wedge type formation. It could go sideways, sideways, sideways before breaking out to either side. It doesn't have to. I'm going to erase it now because I don't like having too much on my chart. But we could be getting into this narrow sideways pattern, recycling all of the, back to neutral. So we have a lot of fuel to go much higher. Okay, I like this. Okay, so the technical picture is bullish. Sentiment still within the fear. Nothing really moved. We still have some stock. The breadth is still the same. Extreme fear. Put call options still fear. A lot of puts are still out there being bought. So we have the same situation as we had yesterday. Okay, so the first of the month begins the same as it was the whole time. We are still bullish, working out the conditions because there is a rotation. Okay, so the market will see today that the market went down. Okay, we have, let's go into the 15-minute chart so you see exactly what happened on the SPY. You see, the SPY, this is the day. Okay, this is 9:30 on a Wednesday. It went up the whole day, consolidated, and then started going down. Okay, and this is because, well, we can suspect. I suspect that it's because of this guy. Fed Chief Kevin Warsh declines to hint at July rate decision, says the inflation is too high. So, of course, the market is picking up that this guy is hawkish. They really want to push the narrative that this guy is hawkish. You know what I think. He is not going to be hawkish. This guy is a career bureaucrat who never takes any chances. I think he won't do anything here either. He wants to govern by committee. Government by committee is not taking chances, is not bucking the trend. Okay, so, and he's also doing, we'll see the weird stuff that he does. He got rid of forward guidance. I mean, okay, it's a very, very small thing to get really, really hyped up about. A lot of people are putting a lot of energy into Warsh. I don't think it's as big of a deal as people say. I think it's a continuation. If not, it's going to be more dovish than people think. Okay, because the side is pumped up. The positioning is pumped up on the hawkish side, okay? So we have more confirmation of this move because, yes, the SPY went down, but we also saw gold because it's going to take a bigger hit. Look, this is the day on gold, the 15-minute chart on gold. Okay, it started the day here doing very, very well, and then it gave up almost all of its gains. Okay, and it gave up most of them around the last hour when Warsh was speaking. Okay, this is 3 o'clock to 4:30, okay? So it gave up a lot of these gains, and it's because of Warsh. So you can see that gold will go down if rate hikes are going to be on the table, and the market might not. Okay, so the market didn't go down as much. So we have some kind of like indirect evidence that it was probably, this market move was probably due to Warsh, this guy. And let's go back to the daily. SPY first. SPY daily. And this is why you had the sell-off and the market doing okay. I don't think you'll see, you know my thoughts. I don't think that there's going to be any kind of big deal with a Fed and Warsh. Okay, so let's get on to the sell-off today. I like the rotation. Okay, we saw SMH here down 5-6%. That's a lot. That would have tanked the market a lot during this phase of the move. Okay, but because the move has already happened in SMH, we had a big move. We went from 380 to 620. Okay, this. And still bullish. There's nothing wrong. Even if it's down 5%, you can see from the moving averages, we're still way above the 50. You can hit the 50, it looks bad, but it'll still be very, very bullish, even undercut it a bit. Okay, so we have stocks like AMD that are down 7%. We have Mu, my favorite, waiting to buy, is down 10, 11%. I'm still not buying. It's not enough for me. I need more of a crack for Mu, for me to buy Mu. Okay, and we had Intel, of course, down that too. I'm still short, by the way. Intel is down 9%. So you're having these, remember, the negative divergence is still there. So I suspect we get this rotation trade. SPY, we have the rotation trade happening, okay? And it doesn't take one day. It's a series of like moves whereby the chips are down or flat and everything else gets picked up, okay? We can look at the heat map and you can see that today, this is a typical rotation heat map, okay? You have technology, semiconductor specifically, semiconductor equipment and computer hardware down, like the SanDisks, all the chip and chip adjacent stocks down, but everything else pretty much, green, including the hyperscalers, including the big boys that were down while this chip move was up. Okay, Microsoft, Apple, Google, all great entry points to buy. Okay, and the financials are up. Everything is healthy. So this is what you want to see over time happening in this market. I suspect that as this happens, the SPY might be down a bit to flattish. It depends how much of a rotation we get, and every other sector will get bid. Okay, and this is exactly what we saw today. Okay, and I think it's going to continue to go on like this going forward. Okay, so today let's recap some of the trades that we did yesterday. Remember, okay, we took a long trade in NVDA, and look at NVIDIA today. Okay, even though the chips were down, the semis were down, NVIDIA is down like 6%. Other semi stocks were down 8, 9, 10%. We saw it in AMD and in Intel and even Mu, Micron. But look, not NVIDIA. NVIDIA is just down 1.25%, barely flat. Okay, this is why we took this trade, because NVIDIA is not behaving like the typical like the typical SMH chip play. Okay, it's something different now. Okay, it's become a bigger move. Okay, become part of the big boys. I would put them in line with Microsoft, Amazon, okay, which is doing fairly well today, and Google. So I expect these guys to catch bids. The hyperscalers, which includes NVIDIA. Okay, we had the big drop down. We sold the 185 puts and bought 205, 215 call spread. I suspect that NVIDIA starts catching a bid going forward. I suspect NVIDIA bucks the semi trend and goes up as the semis go down. Okay, so NVIDIA was still looking good. And yesterday, remember we took a trade on Nike. We said that we had a fundamental reason for Nike. Let's see. Nike has been down this whole time, down a lot, let's say since 2024, even before that. But this is the bear market 21, 22. I want to go since 2024. Nike was at 120 and now we're at 40. So it's been cut by 2/3. And we said that we like the stock because the stock price is going down and we're getting negative divergence. So a lot of the negative news, okay, like the tariffs, the China weakness, and its product marketing type strategy, all of that is bad. But it's already been priced in, okay? And we mentioned yesterday that we wanted to get long before the earnings because I suspect the earnings will do well because the earnings were beating, look, in the past, look, 20% beat, 42% beat, 80% beat at the earnings, and it wasn't being reflected, okay? But eventually it will be. Like in reality, like 1, 2, 3 times the market sees that the earnings are still doing good, so it's not going to die, and it has a great brand, by the way. Nike is still amazing. This is a great company, still making money, okay? But they think it's not going to make as much money. Well, now it looks like they might be turning around, and this is what I wanted to see. I want to see some kind of confirmation. So in the earnings today, they destroyed. They got 72 cents, we mentioned yesterday, and they're expecting 12. Okay, they beat by 479%. So what I did is, as it was trading at, it's at 43 now, but as it was trading at 42-ish, a little bit below 42, I added more, okay? As you recall, let's go back to the option strat. Okay, option strategies. What I did was I bought the 42.5 December call. Okay, so not 42.5, excuse me, 32.5. Yes. So now because I wanted to like get full exposure of the stock. Full exposure of this stock. Oh no, not 30. Yes, full exposure, excuse me. Full exposure of the stock while, you know, expecting the move to happen over a longer term. Okay, so I didn't want to sell puts. I wanted to buy this call because it was relatively cheap. Nike was at like 41 and it was $10. So I was getting it at 42.50. So it was like I'm being long the stock with downside protection. Okay, but today I didn't do this. I added in a different way today. Today I did what we call a zebra trade. Okay, so what I did was same expiry December. I took the 37.5 call. Okay, can I blow this up? Yeah, okay, so you guys can see it better. 37.5 call 2 times. Okay, and I sold, let's do it, add another call. I sold the 50 call. Now why did it once? Okay, we have to unlink it. Okay, and here we just did it once. So a 2-to-1 ratio. Okay, this is the profit profile. Can you see it? Okay, this is the profit profile. You're making you have complete upside, open upside, capped downside. Okay, so why do I like this? Okay, first of all, notice that it's done for a debit. Okay, each 2-to-1 ratio spread will cost you $15.75. Okay, and your break even is just 5% higher from where the stock is right now. But it expires in December. I think this move happens in December. Okay, why do I like this stock? This move? Well, because it acts like a stock because look at the delta. It's 100. 100 delta means this stock structure will perform 1-to-1. If the stock price goes up $1, this contract will make $1. Okay, so it behaves like a stock. It has downside protection. But because you sold a call here, you're not fully exposed to the upside as we would if we just bought a call and sold some calls here. So you are half exposed to the upside. Otherwise, this arrow would continue to go higher here instead of like trail off after the 50. Okay, as you can see, it's cabered. It goes up 1-for-1 here and then half. Okay, but for this, I get downside protection, which I like. Okay, so this is why I decided to play it in a zebra fashion. And the reason the zebra works and you get that delta is because, look, if you look at the delta here, it's at 75. Well, when I did it, it was at 75, not 76. And this, I picked this call to make it a 50 delta. Well, now it's 51. Okay, because if you take 2 times 75, the delta, it's 150. You have a 150 delta minus 50 delta, you have 100 delta. Okay, that's how you get the 100 delta. You have 2 75 deltas minus 150 delta is 100 delta. This mimics the stock 100%, 1-for-1. Whereas the call option at 32 only had like an 85 delta, so it mimicked the stock 85%. Okay, I wanted to enter the zebra trade when I had confirmation that the downside is sort of over. Like yesterday, I didn't have a full position. I did a nice position, and now I have a full position in the stock. This is exactly how I want to be long. We got this confirmation on the charts of it going up on heavy volume. I like this. Okay, it doesn't guarantee that we win over time, but I like the action. I think this is the exhaustive nature of this move came out, and I'm willing to go long. Okay, so that's it, guys. Okay, starting the month off with a rotation in play. The SMH is off. We have SMH that is down, but still in a bullish fashion. Mu, which I'm looking to buy, is not down enough. I'm waiting. You know where I want to buy. Right here, 50. Waiting for that. Okay, big secret. Okay. And of course, NVDA. We saw that NVDA, let's get rid of the moving average so you can see. NVIDIA is not acting like a semiconductor play. It's acting more like a Mag 7 play. And that's why it behaved better today than the semiconductor space. And I like it going forward. And of course, Nike. I love how it's reacting. We took a position yesterday and we added to it today. And now we have a full position. Who knows? I might add more if it starts getting better. Who knows? We'll see. But I like the position that I have right now, and I like how the way this is reacting on a destructive beat of earnings. Okay, I think eventually people will realize that this company is making earnings. It's Nike. It has a great brand. it makes no sense to have destroyed it to this level. Okay, so those are my thoughts going forward, guys. Let's see what happens tomorrow, which is going to be the last day of the week, and we have non-farm payrolls. Okay, this is key. This guy Warsh, his bluster, and all the hope that people are putting into this guy to raise rates and be tough on inflation, might not get the chance to act if the jobs report tomorrow comes in cold or less than expected. Okay, let's see. If it comes in hot, well, they're probably going to sell off the market. But I don't think it's going to be long lasting. It's not going to be long lasting, because I think the fundamentals of this game, of what's going on right now, will prohibit Warsh from being too hawkish in the market. Okay, later, guys.